Hi, and welcome to a late Global View video analysis at 5:30 p.m. U.S. Central Time, Tuesday, April 5th, 2016. And we are coming to you a bit later because we wanted to get as much of the market trend evolution as possible into these charts prior to the afternoon Wednesday, 1 p.m. Central Time release of the FOMC minutes from their March meeting. Now, this is very important because one of the operative questions right now is whether, after her dovish speech last week, we have moved on from the Greenspan put and the Bernanke put to inquire whether there is a Yellen put currently in place. Will Janet Yellen move anytime markets and the economy are stressed to ease or offer more accommodation or supportive language in a way that is driven by a market sensitivity? We'll have quite a bit more for you on that in the post itself, but that's one of the things underpinning the equity since last Tuesday, and we'll look at how that worked out on the price action in a moment. But first, it's important to note a lot of the global data has been weak, with some improvement in the U.S. today on Tuesday morning. So we have to ask, what does all this mean to the markets? Well, first of all, you can see we settled off quite a bit today, and this is down at 2038.80 after getting back, after a lengthy day holding up above it, to the 2035 support level. Now, what's important about that is it is an interim level with the bigger support down at 2020 to 2010, but what we have is quite a few recent over-under decisions in that 2035 to 32 range, and especially as the market sank off below it on the communications previous to Janet Yellen, on the going back to the late week in front of the Easter holiday from communications from Harker and Dudley at the Fed, and even on Monday morning coming in on the 28th from Williams of the San Francisco Fed, the market dipped back in front of Janet Yellen on Tuesday the 29th and held 2020. Right before her speech, it had pushed back up to roughly around 2035 area, and once that text came out showing how dovish she was, it shot straight up. It was at the low there above 2020 before the speech was released, right back up to 2035 once that text was released. By the end of the day, 2050, your next resistance, and by the next morning it was up around 2060, which is your next resistance. But weakness in the data overseas, and again, some random Fed officials coming out with still somewhat more hawkish views, brought the market under pressure again into Tuesday, and it broke down out of its somewhat broader channel from about the 2044 area. It's going to be very important going back in after 1 p.m. tomorrow if this market can start pushing up into the gap above Wednesday's early high at 2047, probably is headed back for 2060, or the much bigger resistance we'll see on the intermediate term charts is up at 2075 to 2085. Again, lower support down around 2020 to 2010 with a buffer down to about 2008 or so. And the reason we suspect there could be some further weakness tomorrow is because so many of the other minions at the Fed are hawkish, both on anticipation and maybe after the fact. The Yellen put being in place might not mean as much in the short term as all of the discussion in those Fed minutes of the people who still do think rates should be raised further sooner than not. But we will see how that plays out. We will get the answer to whether there's a Yellen put if indeed that kind of language is in there, but then the market holds on anyway. Also, we look for a bit of further weakness because going back to late morning today, the MACD indicator leaked out through the lower runaway band, and unless there's some immediate strength tomorrow, this is a sign this could feed on itself. And that pretty much does it for the short-term view of the S&P 500.